David Kostin of Goldman already making his move this week, raising his S&P 500 year-end price target of 4,500 from 4K previously. They say prior episodes of sharply narrowing breadth have been followed by a catch-up from a broader valuation re-rating. This is the month-to-date market performance right now for the month of June. Just looking at a range of indicators at the moment. The Nasdaq is up about 2.5%. Massive outperformance on the Russell, up 6.6. That right there is the KBW Bank Index. The KRX is absolutely flying. The KRX is absolutely flying month to date at the moment. And that's asking a lot of questions about what's next. Stuart Kaiser of Citi. Our sense is the move is more driven by short covering than adding longs. Economic growth is likely a necessary condition for a sustainable rotation into cyclicals. Mira, I wanted to come to you on this. We're starting to see it happen. Just the equity markets start to broaden out away from mega cap tech. Is that a rotation or just repositioning?
It's a bit of repositioning on the margins. We are still likely headed towards an economic slowdown, so we want to be mindful of not leaning too hard into cyclicals at this point. But there are these two different stories going on in the market. The big rally that we've seen in mega cap tech and the rest of the S&P, call it 490. And what we're seeing here is that, look, everything's coming up tech when we think about better than feared profits. We think about a potential pause from a rate standpoint. We think about how resilient that could be in a recession and some of the longer term tailwinds from AI. But if we look at the rest of the market, we're actually seeing fair valuations, and we don't have quite the same concentration issues that we have in tech. So we do want to be selective in the rest of the market, but I'm not sure that there's a huge upside catalyst. So it's really about stock picking in this environment as opposed to diving into the rest of the market, expecting a huge leg up.
Mira, how helpful is history right now? I can bring you two quotes that I've basically read in the last 48 hours, the last few days. One from Bank of America's Savita Subramanian, another from Daryl Cronk of Wells Fargo. It's both offering historical analysis, and I'm not sure how helpful one is or the other. This from Savita: bye-bye bear, the bear market is over. 90% plus of the time the S&P 500 rises over the next 12 months after recovering from a bear. And then I get this from Wells Fargo and Daryl Cronk. On average, history shows the S&P 500 doesn't bottom until 6 months after the first Fed rate cut. Mira, is history helpful or just really confusing right now?
It's a bit confusing. I think what we need to remember is the basic dynamic that markets are forward-looking and do price in a range of potential outcomes. And 2022 couldn't be a worse year in terms of thinking about some of those bad outcomes, whether it's the recession talk for the last 18 months, the continuing of Fed hikes. But I think that where we are today is one in which we don't see a huge leg higher in markets at this point. We need to see different sort of upside catalysts come to bear. But at the same time, we don't necessarily need to retest those lows. I do think a lot of the bad news is priced in. Maybe not all of it. We could see a bit of a pullback from here in the second half of the year, just given the strength of the equity markets over the first 6 months. But nonetheless, I don't think that we need to experience a new market low because so many of the risks at this point are pretty well understood.